I'm Venkatesh Murthy. Welcome to Money Anchors. So today the markets fell dramatically after the RBI governor has come and announced the sudden increase in the repo rate by 40 basis points. It was a fall of 2.3%, which is 391 on a single day. So in this video, let me explain a little bit about what is this BPS or basis points and how is that coming into effect in our economy, right? So primarily BPS or BIPS is a basis points, and this is a unit of measure that is used in finance, especially for interest rates. So before we talk about BPS or the maths behind the BPS, let's talk about demand and supply and inflation. So whenever the supply is lower and demand is higher, the prices of the products go up. The reason it goes up is because there are way more people who are consuming those products and are willing to pay higher prices for the same products. And hence, the raw materials, the labor, and the supply all increases. So when that increases, the inflation comes into picture. So right now we are at a very high inflation, and in order to reduce inflation, the BPS or the basis points are increased by the RBI. So the BPS is nothing but the rate at which the banks borrow short-term money from RBI. And what is BPS? So basically it is point system, and the way you need to calculate this is 1 BPS is nothing but 1/100th of a percentage. In other words, when you divide 1 by 100, you're going to get 0.01%. So an increase of 1 BPS means that 0.01 increase in the lending rate of the money. So far, our lending rate by the RBI to the banks has been at 4%. From 2020, the 4% has never changed and it has remained the same. However, due to the inflation that I just now explained, it has now been increased to 40 BPS. So a 40 BPS converts into a 0.4% of the interest rate. So in total, it is 4.4. So the change is from 4, it is now 4.4%. Now what happens with this particular change is that the banks have to pay that percentage of interest in order to borrow money for short term. Now the banks usually passes on these rates on to the consumers. In other words, the personal loan, the auto loan, the home loan rate of interest increases. When the interest rate increases, the buying power decreases and hence the demand reduces. And that is how the demand and supply gets balanced out. So I hope you understood the whole concept of BPS and what it translates to the economy. Hope you enjoyed this video.